Let's talk about that IMF call today. You know, I wanted to see how accurate that the IMF actually is in terms of predicting, say, U.S. growth over the last 3 years. It turns out they actually underestimate the growth. Take a look at that. For the last 3 years, IMF forecasts coming in below. Do you buy it? Are we actually better than we think?
Well, actually, I think we have been better than we think. If you look at the year-over-year percent change in real GDP in the United States, since the middle of 2010, it's been growing 2.5%, which is a pretty reasonable rate. If you take out government spending, I always like to take out what doesn't support my story. So if you take out government
I do too.
Been there, done it. I mean, if you take out government spending, real GDP has been increasing 3% on a year-over-year basis. I'm a fairly conservative fellow. I look at that kind of comparison and said, that's not such a bad thing if the private sector is growing around 3%. And that's what's been going on. You look at non-farm business output, which is another way of measuring GDP in productivity. It's been the same thing, 3%.
Do you pay attention to these IMF forecasts or any time one of these world organizations?
I do because
we get excited, so.
Yeah, I think I don't know that they're exciting, but I think that they do represent sort of the consensus. You need sort of a benchmark when you forecast. You know, what's the consensus thinking? I mean, Bloomberg puts together consensus estimates, and then we get surprised if it's above or below. So I think the IMF is fairly a consensus organization. They're not going to come out with anything wild, so they're kind of telling you what's out there.
Well, go ahead, Joe.
No.
Well, something that we talk about a lot here on Bloomberg Television in the last few weeks has definitely been China and the effect of Chinese stocks has here in the U.S. And I want to pull up a chart that looks at the 2-year and 30-year spread versus the Shanghai Composite. Yes, there is not a lot of correlation, but if you look at the end of June, where you see the Shanghai Composite start to peak, the spread also rolls over, which means that there seems to be concerns about global growth.
Yeah.
Do you buy that correlation and that thesis?
Well, look, the global economy is really in secular stagnation. Professor Larry Summers has been talking about that. However, he's a Keynesian. I'm not. He believes that we need more government spending to get out of it. I think too much government spending and too much meddling by central banks is why we're in secular stagnation. China has probably had more excesses over the past few years than anybody else in terms of quantitative easing, just pumping in way too much liquidity, and they've just got a massive amount of excess capacity, too much property, and I haven't seen the historical comparisons, but it looks like they just created one of the biggest bubbles of all times in one of the shortest periods of all time.
It's probably kind of too late to fix anything, but what do you think the government should have done since the financial crisis to get the economy going, if not for spending and stimulus?
Well, you know, shoulda, coulda. I think with the benefit of hindsight, the first round of QE made sense. It was desperate times, desperate measures. But all the easing since then really hasn't been worthwhile. And I think the Fed should have been raising interest rates a little bit all along here. Because
so are you like, go raise every meeting now? Is that
no? I mean, they're almost gotten to the point where they can't do it. You know, again, you asked me a shoulda, coulda question. I try to avoid making policy recommendations. I really try to figure out what the policymakers are doing and where they're going next. And the central bankers are masters of the universe. They think they can control and fix all of our problems. And I think the big problem we have now is investors are starting to lose their confidence in that, as we're going to see in China, as I think we're going to see in Japan, and maybe in the U.S. and the Eurozone.
Speaking of investors and how they see things right now, Bank of America has this dashboard where they sort of look at whether everyone's bullish or bearish, and they use fund flows and a few other indicators like that. And as you can see, we're actually getting to pretty bearish levels.
Yeah.
What do you think that's all about? Is it about China? Is it about Europe? Or just the whims of hers?
I think this has been a tough bull market for technicians and for technical indicators and dashboards. I mean, really what it's been.
The stocks have just gone up, basically.
They've just gone up. And, this has been, hate to use this expression, but it's pretty descriptive. These markets have been rigged by the central banks. And we can see that clearly with what's going on in China right now. Anybody betting against these bull markets has been betting against the central banks.
And you would say the Fed has rigged the U.S. market as well?
Well, would you say that the bond market's been truly a free bond market? I mean, none of the bond markets have been totally free.
But the bond market has other problems, right? I mean, they're dealing with new regulation. They're dealing with then lack of liquidity.
Yeah, all I'm saying with regards to the question here, I mean, the central banks have clearly intervened big time in the bond markets through their QEs and through their NZERP, their near zero interest rate policies.
Is there ever a time, though, when bond markets aren't partly a function of policy?
I think you're right. I mean, clearly the Fed funds rate, we used to just target the Fed funds rate and it used to be above zero, and we didn't do quantitative easing, and that obviously mattered. But we've never had this kind of direct intervention of actually having the central banks be this huge in buying securities.
So obviously in China we've seen, what you call this bubble, but the rigged game, and it's ending very badly.
Yeah, very
Would you
quickly.
say that will happen in the U.S.? Is our market doomed to sort of have a similar collapse?
I keep looking at our economy, and I'm actually pretty impressed by how well we're doing, despite all the meddling by the federal government with regulation, by the Fed with all of its various monetary policies. God bless America. It's a great country. I mean, very diversified.
So,
a lot of entrepreneurs, a lot of capitalism. So we're going down the same road as the Chinese and the Europeans and the Japanese, but we have a long ways to go before I think we have to worry about those kind of excesses.
So then what keeps you up at night?
Well, look, I could be wrong about inflation. The reason central banks have been able to get away with this manipulation of the markets and buying securities and keeping interest rates near zero is because inflation has been near zero, and that's been very fortuitous for them. If inflation ever makes a comeback, their credibility will be blown if they don't raise interest rates, and that could make the economy very vulnerable to recession.